pretty correct.
Sam, let's talk about the Federal Reserve and all this easy money. I mean, clearly, with rock bottom interest rates, you just don't have any alternatives to stocks. What's your view on all of this?
Well, I just think that what we're doing is we're debasing our currencies around the world. The net effect of which, I mean, if you reduce the value of the currency, at some point, you're also going to reduce its buying power, and ultimately translates into a lot of inflation. I don't know when. And obviously, what we're seeing here is like a giant tsunami of liquidity, but I don't know that that necessarily means that things are better.
Right.
And in fact, I think the level of uncertainty may, in fact, reach a point here where people are just throwing money because they don't know what else to do with it.
Would you put money into the stock market today?
I'm always an investor in the stock market.
Right? Sure.
So the answer is, would I be, increasing my position? No. I just think that this is a very treacherous market, and yes, it's gone up every day, and yes, you're not supposed to fight the Fed, but you don't have to necessarily fight the Fed if you want to sit on the sidelines.
Now, I want to get more into real estate later on in the show, because I know you are obviously putting money to work there. But what's your take in terms of the U.S. economy right now? You said it doesn't necessarily mean that anything's getting better. So from the front lines where you sit, how do things look?
Obviously, it depends very much on what businesses you're talking about. I would tell you that in our businesses, we're definitely not seeing, overly strong conditions. We're seeing a lot of uncertainty leading to people making, deferring decisions. On the other hand, I want to talk about the apartment business. EQR is doing phenomenal, and I think we're starting to see the beginning of a serious resurgence in the commercial real estate side. In the commercial real estate,
you were looking at some not bubbling up, but some movement in commercial like a year ago when we spoke. That's still sort of where it was.
Yeah. Anyways, I think there's a real desire to solve the problems, and an awful lot of the problems going all the way back to 2007 haven't been dealt with.
David, let me ask you the same question that I asked Sam there. Would you put new money to work in the stock market after what you just said? I mean, basically what you said is really being mimicked. Sam's saying the same thing. I mean, it is what it is. It's the Federal Reserve. But would you want to put money to work in stocks, knowing what we know?
Maria, when I was on one of the CNBC shows last week, when it looked like we were correcting, the question was put to me, what would you do in a pullback? And the answer is that, we would probably be allocating money into the areas that we like, which has been the classic dividend growth, dividend coverage, dividend payout, the real income orientation part of the U.S. stock market. So on a pullback, the answer is yes, and then we're just hitting new highs. But right now, we're comfortable being between 45-50% exposed to equities in the parts of the market that we like. There's other parts of the capital structure. Credit spreads are still look to be fair value right now. There's still other parts of the capital structure that look good to us. But in terms of chasing the market right now at the highs, I don't think that is the operative strategy. It would be actually to move in at a pullback. It's interesting. Do you want to buy the market when the economy is looking shaky and you're hitting new highs, or do you want to really go along the market like you were 4 years ago when the economy isn't looking when the economy's looking that great and you're at the lows? So I think right now, my sense would be to still keep your powder dry, and if we do get the correction coming, it'll be a buying opportunity. But right now, I agree with the with the other person that you're interviewing that right now I would say steady as she goes. Yeah.
I think that this feels like the housing market of 2006. Everybody can't afford to miss it. But that's exactly what happened. Houses are going up every day, right?
Wait a second, because in 2006, prices for homes were going up for what reason? No real reason.
What's the reason the stock market's going up?
The Federal Reserve has created an environment where rates are at rock bottom levels, and
but every one of those dollars is worth less.
How about the fact that the corporate balance sheets are so strong, $3 trillion of cash on balance sheets? What about that?
All I know is I never got, as an operator of a company, I never got recognized for cash in the bank. I only got recognized for increases in earnings. That's the measure of the stock market, not how much cash the company has.
Well, I have to say, Sam Zell telling me that this stock market feels like the housing market in 2006 is a scary comment.
Why? Every single day it goes up. Every day in 2006, the housing market went up. What was the number one headline every day? Housing prices going up. What are you talking about every day now? New high on the stock market every day.
Would you expect the kind of fall we saw in housing to occur in the stock market?
Number one, I'm not that smart.
I don't want you to be a predictor.
Yeah, I'm not that smart to be able to answer that question. But I just think that we are suffering through another irrational exuberance.